Alright, let's cover today's PA. Today is June 3rd, 2026. So coming into the morning, my eyes are instantly drawn to all-time highs as the main prominent draw on liquidity, and obviously all this liquidity below. Currently, we are being held up by a 1-hour bullish fair value gap, right? This is currently what is holding price up. And one thing I like to do is marking out the daily open. And what I notice is price never delivered lower. We instead trade away from the opening price, trade higher, right? Create this all-time high. This likely happened during the London session. So London session chops and leaves all this sell side liquidity behind. It makes its way up here, and then pre-market to AM session, we end up stacking another low here. This is only adding to our draw liquidity lower. So not only do we have these intermediate session lows resting inside of this 1-hour bullish fair value gap, but we now have this internal low that was stacked here at 545. So this serves as sell side liquidity, or you could see it as one big draw, low resistance liquidity here. So what I'm anticipating for market open is for price to either deliver lower and then send price higher, targeting all-time highs as the prominent draw, or for price to ignore these draws off open and deliver higher before we could get a reaction to now send price lower. That was the bias I was getting on the higher time frame. Now let's see how we spotted that internally. So what a setup would have looked like internally. Let's now drop to a smaller time frame here on the 5-minute. Currently 6:25, so in about 5 minutes, market is going to open and have a reaction. Let's see what price does. Here's the 6:29 candle, so 1 minute, market opens. Market opens, right? We end up edging all-time highs, so we're likely going to continue to all-time highs. And as you guys can see, NQ delivers to all-time highs, sweeping out that draw. And what that did was it put in a bearish SMT with ES, because while NQ was sweeping all-time highs, ES was nowhere near that draw. And what we were anticipating before market open was for these draws to now be a target. So how do we target these draws on the smaller time frame and take an entry? So internally, we have this 1 minute bullish gap you guys could have used as a condition. You could have taken an early entry off of this candle, targeting these draws on liquidity lower. That was a setup that we saw play out. Aside from that setup, we are now seeing bullish structure being created out of this 1-hour bullish gap, right? But what happened was we left Asia low still intact right here, but we did take out the London low and the internal sell side liquidity that we had marked. But a setup I did see play out was this 15-minute inverse gap right here. This inverse gap was actually used to send price even lower, and if you marked your fib from the swing high to the swing low, this would have given you a range to now send price lower. So given that this was a 15-minute IFVG aligned with equilibrium of this leg, that could have been a possible entry for you to see price traded lower, targeting Asia as a draw, aiming for about a 1-to-1, or you guys could have aimed for the draws much lower than that. One thing to pay attention to is we also had previous day low as a target. If we can see all-time highs getting swept, we could then see price potentially aiming for previous day low. ES was the leading asset and it was moving further ahead than NQ, but let's see if we have anything at key open. So it was around this time where we actually saw a bullish SMT being put in with the previous day low, where ES swept the previous day low and NQ was nowhere near that draw. So if given bullish confirmation, we could see price now being sent higher. A good draw on liquidity was midnight open here. We had this unfilled 15-minute gap here. And if we were to mark our fib from the swing high to the swing low, we did see a tap of equilibrium, but we left OTE and 0.79 right around midnight where we could have seen a potential entry. So let's skip through price. Here is the 7 a.m. key open. And what we did was we didn't remanipulate. We actually moved away from the key open. So see this as a devil's mark, a draw on liquidity, right? If you guys watch liquidity part 3, you'd understand this. It is the 4-hour open, but instead of remanipulating to create that 4-hour low, we end up simply trading away from it, and we're likely going to return to this draw. This was something I was paying very close attention to, and it was an entry model I was anticipating for. So leaving this devil's mark behind, if I could get a potential entry out of these fib levels, I would have been targeting this devil's mark and potentially the remanipulation of this low that was left behind. So as I skip through price and we tap midnight open here as our draw, I'm now looking for confirmation to send price lower. So I'm looking for any fair value gap that we could see get inversed and to then send price lower. So this 3-minute gap ends up getting respected. So what we end up seeing is price remanipulate these highs, and we see a 2-minute inversion of this bullish leg, which I did take entry on right here. So I took this entry, my break even from at this gap, and I wanted to see price push lower, targeting this devil's mark and potentially price trading lower. So what I did was I took my entry a little early here, stops at this high, and I was aiming for this devil's mark right here. So as you guys can see from my entry point, trading into midnight open, but we remanipulate these highs, we get bearish momentum, we get a 2-minute inversion, so I took my entry here a little early, and I went break even as soon as we tapped this 3-minute gap. Why? Because if I'm anticipating movement lower, I'm expecting this 3-minute gap to get ran through and to be completely disrespected. So I go break even here, and not only that, but with all this choppy movement, I wasn't as convinced in this trade as I was previously. So we see what price does. I end up getting break even on this trade. Price remanipulates once more, and then from here I believe we do deliver lower. But as you can see, after I get break even on this trade, price does deliver to these draws on liquidity, but the way in which it reached these draws was very choppy and very unpredictable. You can see that instead of having one swift motion down like we did earlier in the session, we chopped around and made our way down very, very slowly. This is something to avoid. This isn't the market you want to be trading in. One thing I want to note was that this was already a very risky entry because we had already done a good amount of points before this accumulation in price. So price accumulated, remanipulated, and then it did deliver. But yeah, I hope this PA video helped. This was a very interesting session, so I'm not mad at it. A lot of times you guys will have PA like this where it's not perfect, right? It's not always going to look like this where you get one very clean dump. You're going to see price chop around at times, and that's just something to get used to. But yeah, this is just another video to the PA series that's going to continue down the line, and I hope this video helped. And if you have any more questions on this PA, just DM us in the Discord.